Okay, let's start with a classic story. Remember the Trojan horse?
Ah, yes. Virgil's Aeneid, the giant wooden horse left outside Troy.
Exactly. The Greeks pretend to sail away, leave this magnificent gift, and despite that famous warning, beware of Greeks bearing gifts.
Which sounds like pretty solid advice, yeah.
Right. The Trojans pull it inside their walls, and, well, we all know what happened next. Disaster came from the inside.
A seemingly wonderful gift, but it actually held the key to their downfall. It's a powerful metaphor for things that maybe aren't quite what they seem at first glance.
Precisely. And that's the angle we're taking today. We're looking at a really interesting article from Bitcoin Magazine called Bitcoin is a Trojan Horse for Freedom.
Okay, that title definitely grabbed your attention. Sounds a bit dramatic, maybe even a little negative.
It could seem that way initially, yeah.
Yep.
But as we're going to explore in this deep dive, it actually points to a really fascinating and perhaps hidden aspect of Bitcoin.
So the mission today is to look past Bitcoin as just, digital gold or something people buy hoping the price skyrockets, the whole number go up idea, NGU.
Right. We want to dig into this other layer, the Freedom Go Up technology, or FGU, that the article argues is baked right into Bitcoin.
And crucially, how this freedom aspect works, even for people who are maybe just interested in the potential profits and don't initially care about or even realize the freedom part.
Okay, so let's start where most people start. The surface appeal, the number go up. Because, let's be honest, that's what gets Bitcoin on the news, right?
Absolutely. You can't ignore it. Over the past, 12 years or so, its financial performance has been, pretty much off the charts compared to most other assets. That kind of return naturally gets attention.
Huge attention. And that performance, that's the shiny exterior of our Trojan horse, isn't it?
That's the idea. It's this potential for, significant financial gain that pulls people in. And it's a really wide range of people, too.
Yeah, not just individuals anymore.
No, exactly. We're talking individual investors, sure, but also big corporations. The article mentions Tesla, Square, putting Bitcoin on their balance sheets.
And potentially even governments looking at it, right?
Right.
As this sort of digital gold, a hedge.
That seems to be the thinking for some. A way to preserve wealth, maybe gain an advantage. We saw those Bloomberg headlines suggesting Bitcoin was starting to displace gold as an inflation hedge for some investors.
That's a big psychological shift in the traditional finance world.
It really is. And Michael Saylor from MicroStrategy, he talks about it like a one-way street.
What does he mean by that?
Well, like how Argentinians might view the US dollar something stable you acquire and just don't want to trade back out of, especially if your local currency is unstable. The idea is Bitcoin, with its fixed supply, becomes this ultimate long-term store of value.
Makes sense. And the article hints that Bitcoin could eventually take a bite out of some massive markets, right?
Yeah.
Gold, art, collectibles, maybe even stocks, real estate, bonds.
Yeah, the potential scale is enormous if that narrative continues to gain traction. We're talking trillions and trillions of dollars in those markets. So the number go up, potential looks, very significant to many.
Okay, so that's the attractive exterior.
Yeah.
But the core point of the article, the hidden payload inside the horse, is this freedom go up technology.
Exactly. And it's crucial to get this. NGU and FGU aren't really separate. The article argues they're intrinsically linked. They feed each other.
Right, so let's unpack that. How does Bitcoin actually deliver freedom? What's under the hood, so to speak?
Well, you have to look at where Bitcoin came from. It wasn't born in a bank or a government agency.
No, again for the cypherpunks, right?
Precisely. A group focused on digital civil liberties, privacy, using cryptography to empower individuals. They were thinking about separating money from state control, fighting surveillance, long before Bitcoin existed.
And Satoshi Nakamoto, the creator, basically turned those ideas into working code.
Kind of, yeah. Satoshi materialized these cypherpunk aspirations into Bitcoin, initially framed as, peer-to-peer electronic cash. It was built with certain principles embedded.
So it's not just about getting rich, potentially. It's about changing the power dynamic around money.
That's the argument. It offers anyone, anywhere, access to what the article calls a superior savings technology. Doesn't matter who you are or where you live.
Okay, but what are the specific freedom features?
Well, several key things. It's designed to be censorship resistant, meaning In theory, no central authority can easily stop you from sending or receiving transactions.
Okay.
It's undebasable the supply is capped at 21 million coins, so governments can't just print more and inflate away its value like they can with fiat currency.
Right, built-in scarcity.
Exactly. Then there's surveillance resistance. It's not perfectly anonymous, but it offers more potential privacy than the traditional, heavily tracked financial system. And it protects against confiscation, especially if you hold your own private keys.
You control the asset directly.
Yes. And it's programmable money, which opens up possibilities for rules and contracts without needing traditional intermediaries.
The article gives examples of people already using this. Dissidents, protesters, journalists in places like Minsk, Lagos, Buenos Aires.
Yeah, people operating in environments where the traditional financial system might be used against them or is simply inaccessible or unreliable. For them, these freedom aspects aren't theoretical, they're potentially vital.
It draws a contrast, too, doesn't it, between what world leaders say about human rights and what sometimes happens in practice.
It does. It points out the, let's say, inconsistencies. Dictatorships on human rights councils, big companies sponsoring events in controversial places, Wall Street attending conferences. It suggests Bitcoin offers a system that operates outside of those political and economic compromises.
So the key idea is that people chasing number go up
Yeah, just pursuing their own financial self-interest.
are actually, maybe without even realizing it, strengthening this freedom go up network for everyone else.
That's the core of the Trojan horse concept here. Bitcoin is rewiring the system from the inside, driven by individual choice and perceived benefit, not by force.
Okay, so how did this horse get inside the gates? It wasn't pushed on people.
No, that's key. Satoshi created it, released it, and it spread voluntarily. People adopted it because they saw value, primarily that NGU potential at first for many.
Right.
The established financial world is increasingly drawn to it for those financial reasons.
They see the potential profit, the hedge.
Right. But the argument is many of them haven't fully grasped the implications of adopting something that's inherently decentralized and resistant to control. They're focused on the shiny exterior.
Yeah, overlooking the soldiers hidden inside, so to speak. The article mentioned attempts to centralize Bitcoin failed, something called the block size war.
Yes, that was a really pivotal moment. Basically, some influential players wanted to change Bitcoin's rules in ways that could have made it more centralized, maybe easier to control or scale in a certain way, moving it away from the original peer-to-peer cash vision.
But it didn't happen.
No. The broader community, users, developers, node operators, they pushed back and rejected those changes. It was a major test, and it reinforced Bitcoin's decentralized nature. A victory for the freedom aspect, you could say.
And this idea of people holding their own keys, their own Bitcoin directly. The article calls them fortresses in cyberspace.
It's a good image because if you control your private keys, no third party holds your Bitcoin for you. It's fundamentally different from money in a bank account.
Or like gold, historically. The article mentions the U.S. government confiscating gold back in 1933.
Executive Order 6102, yeah. People were forced to turn in their gold. That kind of top-down mass confiscation is incredibly difficult, maybe impossible, with Bitcoin if it's held non-custodially across millions of individuals globally.
So there's this irony. Powerful institutions chasing returns are willingly adopting a technology that could potentially erode their own control over finance in the long run.
That's the fascinating part. The NGU lure is so strong, it's blinding many to the deeper FGU implications.
It also mentions how Bitcoin's early days, when it was kind of weird and dismissed by experts, that actually helped it.
Yeah, that's a great point. Because economists, central bankers, political scientists, many just didn't take it seriously at first. It was seen as niche, maybe a fad, not a real threat.
So it had time to grow under the radar.
Exactly. While the establishment wasn't paying close attention, the network was strengthening, the code was improving, the community was growing, the horse was quietly being brought inside the city walls, filled with this potent technology for financial freedom that aligns incentives in a unique way.
How so? How does it align incentives differently?
Well, think about traditional activism or human rights. Often there's a conflict between doing good and making profit, right? Businesses might ignore abuses if it helps their bottom line.
Sure, that happens all the time.
But with Bitcoin, the argument goes self-interest and freedom are aligned, even if you're only buying Bitcoin to make money or mining it for profit.
You're still securing the network, making it stronger.
Precisely. You're contributing hash rate, you're adding to the network effect, you're increasing liquidity. all of which reinforces its censorship resistance, its immutability, its freedom-enhancing properties for everyone, whether that's your intention or not.
The article used the Lightning Network as an example, didn't it?
Yes, that's a perfect illustration. Exchanges adopt Lightning primarily to lower their own transaction fees and offer faster withdrawals, basically, for business reasons, for efficiency.
Makes sense. Cheaper and faster is better for business.
Right. But in doing so, they are simultaneously deploying and encouraging the use of a technology layer that significantly enhances user privacy and enables micropayments, which are huge for financial inclusion and freedom.
So profit motive unintentionally spreads freedom tech.
Exactly. And potential future upgrades, like maybe SIG for better privacy, could be adopted for purely economic reasons to save block space, lower fees, but the side effect would be enhanced privacy for all users, including those who need it for safety or political reasons.
And when a big company like Tesla buys Bitcoin, that creates a ripple effect.
A huge feedback loop. It generates headlines, increases interest, potentially boosts the price, draws in more developers, encourages more miners to secure the network, leads to more people holding Bitcoin. It all reinforces the cycle.
So is it unstoppable now? The article seems to suggest it's too late for those in power to really put the genie back in the bottle.
That's the strong assertion, yes. The network is too distributed, the incentives too widespread. Even authoritarian regimes, they might try to use Bitcoin initially, say, to get around sanctions. Venezuela, Iran, North Korea are sometimes mentioned in this context.
Right, use it for their own ends.
But the act of using it, of handling it, exposes people within those systems, officials, technologists, ordinary citizens, to how it actually works, to its decentralized nature. And that knowledge, that understanding can be hard to suppress once it starts spreading.
Like the soldiers revealing themselves inside the walls.
Kind of. And the article posits something interesting, that Bitcoin might actually be a bigger long-term challenge for closed societies like China than for open ones like the US.
Why is that?
Because Bitcoin's core principles, property rights, free speech in terms of transaction freedom, checks and balances through consensus rules, they align much more closely with the values of open societies, even if there are regulatory debates. For authoritarian regimes, those principles are fundamentally subversive.
So it could gradually erode their control.
That's the potential long-term impact, yes. It offers citizens a financial escape hatch, a way to operate outside of complete state control over money.
So wrapping up, millions own Bitcoin now, mostly for the NGU, the investment potential.
Yes, likely the vast majority.
But many might be completely unaware of this deeper FGU layer, this freedom engine humming beneath the surface.
That's the core of the Trojan horse idea. It looks like one thing in investment, but it was engineered fundamentally to be something else, a way out of the traditional system. The article calls it the red pill for finance.
And everyone who participates, whether they know it or not, is part of this shift.
Consciously or unconsciously, yes. They are all pulling the horse further inside the city gates.
And even if some people in power see the danger, the article calls them the Lacoons and Cassandras, warning about the gift.
Their warnings might get ignored because the potential reward, the NGU, just glitters too brightly, as the article puts it. The financial allure is incredibly powerful.
So Bitcoin arrives as digital gold, an asset. That's the horse everyone welcomes. But inside?
Inside is this technology for censorship resistance, confiscation resistance, debasement resistance, a challenge to centralized control, driven, ironically, by the pursuit of profit.
What appears to be just about number go up inherently drives freedom go up.
That's the takeaway, the alignment of self-interest with decentralization.
Which leaves us with a final thought for you, the listener. In a world facing increasing surveillance and control, what are the real long-term implications when a technology naturally aligns chasing profit with decentralizing power and enabling individual financial sovereignty? What could that mean for the future of freedom? And maybe, are there other Trojan horses out there in society today whose full impact we don't yet grasp?